It's a big week here on the Murfreesboro Real Estate Report because this week, not only do we look at the past week, but we have the month-end numbers for November. So we're very excited to get into that, look at the November numbers and see how they compare to last month and to previous Novembers. I'm John Turner. I'm the team lead of the Turner Victory team at Onward Real Estate. Every week we bring you the Murfreesboro Real Estate Report that really reflects on the real estate, not only in Murfreesboro, but in Smyrna, LaVergne, Eagleville, Christiana, Rockvale, Fosterville. What am I leaving out there? We cover all of Rutherford County and actually get into some information about Middle Tennessee and also national stats as well. So let's go ahead and jump in, see what happened this past week. This past week in Murfreesboro Real Estate, and this is the week ending on December 8th of 2025. And you can see we have 1,418 homes that are currently on the market. 207 new listings. That's huge. That's a huge number. And so much of it is right here in the 300,000 to 400,000. We had a couple of builders that actually put a lot of new listings on the market, and quite frankly, most of those haven't even started them yet. 50 of those 77 were actually new homes, and only one or two of them actually were under construction yet. So that's a little inflated number, but that's what we have showing in the MLS. Pended 72 homes this week. There were 85 closings. 104 homes came off the market. We could call them expired. We could call them canceled. Really, the buzzword right now is delisted because we're seeing a lot of sellers that are delisting their homes right now. Over the past 3 months, 1,249 homes have closed in Rutherford County. That leaves us with a 3.41 month supply of inventory. This is based upon a rolling 3-month supply. 5% of the homes on the market went under contract this week and nearly 6% closed. So that's some of your numbers. Let's look at it in graph form just real quickly for you. The first thing you're going to notice is the new pendings are completely off the charts. We have not seen anything like that. Even going back to last year, had 190 there. But that is new construction, okay? So builders just putting inventory into the MLS. Most of them, they haven't even started the homes. Some of the builders who put the listings in there are builders who will not start a home until you go under contract. So it's really just a placeholder trying to draw you into their subdivision. So it's not all of them are homes coming up out of the ground right now. So just keep that in mind when you're looking at that. Our pendings were down quite a bit. We had 72 this week compared to 111 this time last year. We're also down compared to the 84 that we had last week. So pendings are down this week. Our month supply actually eased a little bit here. We were at 3.49 last week. We're at 3.41 this week, which continues that trend. As you can see, we've been between basically 3.25 and 3.5 for quite some time now, going all the way back to probably late summer. So available inventory. This is the aggregate chart, but let's get down to 2025. We've been talking about this curve here that we normally see, and we could see it going on right now. We were above 1,500 homes since June. Hovered there, did top out at 1,606. We are now at 1,418 homes. So even with that surplus of new listings, which was higher than normal, we are still approaching 1,400 homes on the market. This is a normal trend for this time of year. I think I've showed y'all this before. This is back 2024, so last year, and you could see that trend go as well. The difference is right here, whenever I look at 12/9, we had 1,108 homes on the market. This time last year, we have 1,418 homes on the market this time this year. So 5% of the market went under contract. We're still trailing the past couple of years. 2 years ago, actually last year, we were at, if I can hover over that, almost 6% of the homes on the market went under contract, and almost 8% 2 years ago. But remember also, not only are our pendings down some, but the inventory. The inventory was much tighter, so you would expect that to be the case. We'll get into monthly closings here. Let's go on over. Let's jump to the monthly closings and everything for November. Actually, what we look at for the month of November. So our new listings. And if you look, whenever I click on this, it does pull up this line, and this is 2024 where we had 712 new listings, and this year we have 598. We're down 16%, but also you can, over here on these charts, this compares to the last 3 years. So we were at 655 for 2023. Some of the important things we like to look at is our new under contract. That means homes that have gone under contract, new contracts. We were up 5 units for this year versus last year. So only a 1% increase. It's interesting, though, because in November 2023, we were at 373. So that is very interesting and significant that is staying up. We've talked about the inventory numbers, the closings. This is another thing we look at. Man, if you look at last year, we had 469 closings, but this year only 368. We were down 22% on closings for the month of November over last November, and down significantly from 2023 also, where we saw 441 homes closed. So pendings or closings are definitely down. The sales price average, this does not mean prices are dropping or they're not dropping or whatever, because our average sales price is down. It could mean that we're selling a lot lower priced homes versus the homes that are the higher price. So take that with a little grain of salt, but it is interesting. We're back closer to the 2023 numbers. We were at 467,000 last year. We were at 503. Our median sales price, again, you look at this, 420 versus 459. Now, I do put a little bit of stock into that. That just tells me that you have more lower price homes selling than the higher priced homes, or a bigger percentage. Days on the market. If you're a seller, definitely pay attention to this. Days on the market are up 62% over this time last year. Huge jump right here. That 41 days, that's on the closed homes. Okay, so if your home is still on the market, it's not counted in these days. And then month supply here, this particular configuration has us at 4.89 months. I have us at 3.41, I believe. The difference is they use a 6-month rolling average on this versus the 3-month that I do. So looking at this snapshot right here, too, I think it's really important. There's a couple of things I want to look at. Sellers, your showings. This is huge. We're looking at the past 3 years, and we're looking at it on a monthly basis. In November, if you had a house on the market in Rutherford County, you averaged 3.91 showings. 3.91 showings for the month of November, okay? If I go back to November of last year, we're at 4.81, so almost a half a showing more last year than this year. And if I go back to 2023, 5.9, so 2 to 3 more showings per month. So that just means there was more buyers out there looking per showing than what we have this time this year. So that's something that I think is interesting. I think it tells where we are right now. Also, if we look at our price per square foot, this is very interesting. Price per square foot is an average across the board. So don't put too much stock in like this right here back in December 2024. It was at $232 a square foot. Don't just take the square footage of your house and multiply times 232. That's an average. There's a lot of things that affect that average, but it is a good metric for us to look at. If you notice this, in December of 24, we peaked at 232. We did come back up at 230 in 2025, but look where we are right now, 218. Look at this. This is a huge drop right here. And what I want to do is, those are the ones that are on the market. If you want to look at the ones that, let me see, that's the sales price. I'm sorry. The ones that are on the market, this is where it gets a little interesting, is they have not dropped as much See this? See how this spread? So the ones that are selling are the ones that have gotten more aggressive with their pricing. When we look at the, I need to do the average, sorry here. When we look at the average price per square foot of those that are under contract too, see, we could see that these have kind of fallen closely the same line, these first two here, but then people are really, they're getting a little bit more motivated. So sellers, if you're looking to sell your house, look who you're competing against. You're competing against people who are motivated. Not only resellers, but builders too are throwing out all sorts of incentives out there. Buyers, look at this. This is what we start calling opportunity. This is a chance. I mean, this price right here at $218 a square foot, how far back do I have to go to get to $218 a square foot? It's $220. Let me see here. Average sales, $216. So we have to go back to March of 2024 to see sales prices per square foot this low. So something to think about if you've been on the fence about buying a house. Something else to think about, mortgage rates have certainly helped us some. I take you all the way back to January where they were above 7%. The average 30-year was above 7%. Saw some drops, topped back out here in May, but look at all this drop right here. We are down at 6.19. That's the average. I am seeing people get mortgages in the fives right now, the upper fives. So affordability, we see house prices coming down some. We see mortgage rates coming down some. That is helping with affordability. That's what we need. We have to have more affordability, especially for those trying to get into the market for the first time, or if you haven't been in the market for a while. Those of you that have a house to sell, if you've been in that house more than probably 2.5 years, you have some decent equity in it. So that helps you move on to your next house. But this is good signs for the housing market. Okay, it is. Now, if you're a seller, you're probably losing a little equity here and there. We talked last week about the FHFA charts that come out, and that prices in the Nashville, Franklin, Murfreesboro MSA were down 0.8%. I look for those to continue to drop. I think we've seen a bigger drop since the end of September, and that's when those charts run through. Since the end of September to the beginning of December than we saw in the third quarter. So I think we're going to continue to see that trend. And no, I am not predicting a crash. Buyers, if you are sitting on the sidelines waiting on that crash, I'm not seeing it in the data right now. The inventory is too tight. As a matter of fact, builders have pulled back on building. That concerns me because as we start eating through some of this inventory, because things get a little bit more affordable, we're not going to have nearly as many new construction houses out there as what we will need. In the Nashville area so far year to date, building permits are down about 3,000, and that's probably rough math, probably about 15 to 20%. So that is something we're watching. I'll cover that in a future episode for us. So this right here too, just real quickly, the light colors are homes for sale. And this is going back to August of 2024. The red is pendings, and the dark green is those that are sold. And you can see homes that have sold, it's definitely tapered off, but the inventory has remained up. So sellers, you're competing against a lot more sellers for the same amount of buyers. And buyers, you have a lot more choices there. So one other thing real quick, this is talking about the biggest home price declines are hitting the markets that overheated most during the pandemic. So basically, like Austin, Texas. Austin, Texas led the nation in appreciation, and we are seeing them get hit really hard right now. They went up 72% from 2020 to the middle of 2022. And now, since the peak in 2022, they're down 26%. And I'll do this a little bit bigger here so you can see it. So we're seeing a lot of these homes over here now getting into the red. And red just means they're decreasing at a faster rate. If you look at the right here, Davidson, Murfreesboro, Nashville, we were up 51%, which is a huge increase, but not nearly as big as some of the other parts of the world. They have us down 3.2% from that peak. I think we're still going to go down a little bit. again, not tons, but I do think we're going to go down a little bit more. But that's good, making homes a little bit more affordable for those who want to get into them. Because I read a stat the other day that the average homeowner has a net worth of about $400,000, and the average non-homeowner has a average net worth of about $10,000. Now I know there's a lot more to it than just owning a home, but a lot of people are able to build their net worth by owning a home and getting that steady appreciation that generally we'll see about 5% every year. So we certainly want as many people to own homes as we can. It's a great way to build wealth, to save for retirement. Then it's just a lifestyle, having a home to call your own, be able to paint the rooms whatever color you want to paint them, be able to plant whatever flowers you want to plant or whatever it is. And that's a quality of life for you. So please, as you've been watching this, comment below. Let us know you're watching. Let us know any questions you have. We're more than happy to answer those. Again, I'm John Turner. I'm the team lead of the Turner Victory team at Onward Real Estate. I bring you the Murfreesboro Real Estate Report every week. I look forward to doing it, and I appreciate you listening to it. Our viewership definitely has risen over the past few weeks, so hopefully you're getting some good information out of this. But again, please let us know if there's anything else you want to hear or see or anything like that. We'll bring it to you. But until next week, I hope you make it a great and wonderful week. Thank you for tuning in.